The trading strategy I'm going to teach you is simple, repeatable, and the best part is you can use it every day. And I'm going to give you the step-by-step guide. We're going to go over how it worked, and then I'm going to show you how I actually used it in the live markets. A lot of traders hop back and forth going from strategy to strategy, and if you apply what I'm going to teach you in this video, I'm telling you this is the last strategy that you'll need. Okay, so today we're going to be talking about correction-based trading. For my strategy, I have two ways of executing, and that is a continuation-based trade or a correction-based trade, which we're going to be talking about today. So first, we're going to use our correction-based trade and partner it with supply and demand. This is going to be very, very important. The first thing you need to know is what is a correction-based trade? So a correction-based trade is any trade that goes against the trend. So for in this example, price is pushing up extremely with bullish volume and it comes back down. A correction-based trade will be trading the correction of the overall move. So if price is going bullish, a correction based trade would be a sell. If price is bearish, a correction based trade would be a buy. Now, how we can identify a correction based structure and not a reversal is by the volume. So if we have an impulsive leg in the market where price pushes up with volume and then we start to see a slow correction to the downside and slow and low volume, then that'll indicate that price is in a corrective structure. I know we talk about all the time, you don't want to trade against the trend, you don't want to trade against the trend, but when we take our correction based trade is because price is in a corrective structure in our market session. So this is very, very important. We want to execute at 9:30. If we pull up our strat here from 9:30 to 11:30 a.m. Eastern Standard Time. So if the markets are currently in a corrective structure within that time frame, then we're going to execute on the corrective structure and just take what the markets have. But how we execute on a counter trend trade versus a trade that is in the direction of the trend is a little bit different. So you're going to want to watch. And I made a full video breakdown going through my exact trading strategy, and you can find that in the link below. So step one in our strategy, you want to wait for a high to get broken. So price pushes up, we correct down, and then we have a high breaking. This indicates that price is in a bullish market structure. Now, what do we want to see happen next? We want to wait for our lower time frame shift. So if price is in a bullish market structure, we're creating higher highs and higher lows. We then want to dial down to the smaller time frame and see a smaller time frame shift. That'll be a low get created, a high, and then a low get broken for a correction up. And then we want to see obviously a continued move to the downside. We have to wait for that low to get broken. So price to move down, form a high, and then break through that low, rejecting off of the high up here. That is an indication that we're entering our corrective structure, and price on the smaller time frame is flipping now from creating higher highs and higher lows within this trend to now creating lower lows and lower highs, flipping this trend, right? So that is our step two. Step three is entering after the retest, and we'll set our stops above resistance. So after price breaks through that key low there, flipping the lower time frame structure from being now creating higher highs and higher lows to creating lower lows and lower highs, we want to scale in on the first retest. And I'm going to show you how we actually get in and what candle specifically that you want to be on the lookout for. And this is how it would look in an actual market structure. So you can see price pushed up here. We've seen a correction down. Then we had a high get created at the beginning, likely at the beginning of our market structure. And then we see then price to close as a bearish candle. And on the smaller time frame, we would see within this area a smaller time frame shift. So I'm going to show you the two examples of trades that I took this week executing this exact strategy. Okay, so today is Thursday and I've taken two trades this week, and both trades were corrective structure based trades. And I'm going to explain exactly how we capitalized on it. Price was in a bullish market structure. You can see that we had our new high get created here that broke through our previous high here. Note that I do not trade until the 9:30 New York open. So you can see 9:30 opens up, price then pushes up, and we have a new high get created, right? So when the price created this new high, I knew that I wanted to take a correction based trade because we had so much volume from that push up. Now, what I'm looking for is my lower time frame shift. So you can see I'm looking at the markets here on the 5-minute time frame, and the 5-minute time frame is genuinely where I like to stay at. Generally, the 5-minute or the 15-minute time frame, and I'm going to show you how this trade actually pairs perfectly with both the 5-minute, the 15-minute, and the 1-minute time frame. So we're going to dial down to the 1 minute time frame here, and we're going to look for our lower time frame shift. So price had broke through this high, creating this high up here, and then we see that we had a high, a low, a new high because it broke through this previous high that broke through the key high. And then price then broke through this low with this move to the downside. We've seen a corrective structure up and then another break of that low. This now confirms that price is going from creating higher highs and higher lows to creating lower lows and lower highs. So when we get our correction here, we want to wait for the 5 minute candle to close bearish. And you can see that this aligned perfectly with both the 5 minute and the 1 minute. So we want to scale into our trade on the first bearish 1 minute after a bearish 5 minute candle close. This is very, very important. So you want to wait for your 5 minute candle to close bearish. You can see here, I waited for this 5 minute candle to close bearish. We had our lower time frame flip. So then we just want to scale in after the 1 minute candle shows us that price is pushing down. So you can see that this 1 minute candle closed as a bearish candle, which was the first 1 minute and the start of the new five. Remember, we're anticipating this 5 minute candle to close bearish. This 1 minute candle would be the indication of the top wick for our current 5 minute. Very, very, very important. And all we're looking for is a 1 to 2 risk to reward. Now, this is so important on your corrective structure based trades. We only want to look for a 1 to 2 risk to reward because at any moment, price can flip and go back into the direction of the trend, as you can see. But by that time during the day, I actually had already made my money, but my brother was able to capitalize on the continuation based trade using our continuation based strategy as well, securing him a 1 to 2 risk to reward. And you can see he could have carried for a little bit more profit on that 1 to 2 risk to reward, but he was able to capitalize on this. And I break down these continuation based trades in the video down below in the link. So the second trade I took this week was actually taken this morning during my trading session. We were in a bullish market structure. As you can see, prices creating higher highs and higher lows. At our 9:30 open, price broke above these highs up here, right? And so we want to see where our lower time frame shift is. We want to dial down to our 1 minute time frame here, and you can see that our 1 minute time frame after breaking the high, price pushed, broke through this high, it came down and it broke through this low, right? But that's not our indication. We want to see a flip. Price pushes up, then it breaks through that low again, and you can see price begins to push in this bearish market structure. So where I scaled in specifically on this trade was after this 5 minute candle closed bearish. So once we got this 5 minute candle to close bearish, we already have our lower time frame market shift, and that aligned with the 15 minute candle closing bearish here. You can see our 15 minute candle closed bearish, our 5 minute candle closed bearish, and we have our lower time frame market shift. That is all the confirmations we need to be able to execute on our trade. So after that 5 minute candle closes bearish, I scaled in on the first 1 minute candle to close after this here. So you can see here, the very first 1 minute candle to close, which was in here. After it pushed up and flipped, I went ahead and took my entry, looked for just a 1 to 2 risk to reward on the trade. And I was in and out of this trade in like, I believe 20 minutes. It only took like 20 minutes, 5, 10, 15, 20 minutes. Yeah. So it took 20 minutes to hit this 1 to 2 take profit on this trade. And you can see after our 1 to 2 hit, price grabs liquidity at these lows. My brother was actually able to capitalize on this trade as well. After it broke through these lows, price then, flipped and took us out. And that's why we want to make sure that we get out at our 1 to 2 risk to reward on our correction based trades. On our continuation based trades, we can continue to hold those because it flows in the direction of the larger time frame trend. But on our correction based trades, this is how we want to execute. So I hope you guys were able to understand how I execute on my correction based trades. When are we looking for correction based trades? If price is in a choppy market structure, you don't expect a lot of volume. Those are when you want to be able to take your correction based trades, as we had an impulsive move to the upside here and then a slow move to the downside. This was consistent, as you can see throughout the rest of the session, pretty much chop, but we were able to still execute based off of this correction based strategy, right? Just simply using supply and demand and partnering that with our multi time frame analysis. I'm telling you, this thing works like a charm, and I hope you guys are able to make a ton of profits. And if you want to see how I use the full 9 steps in my system, you can click on this video here.